I'm John Lopez.
And I'm Lou Guglielmetti, and we are managing partners with Asset Preservation Michigan.
Are you about to retire soon? Do you already have the date marked on your calendar and the time you're leaving your current employer? Let our firm help you, whether it's to see what kind of risk you're taking in your portfolio or to the extent of creating an estate plan to avoid probate. Let us create a unique plan for just you and your loved ones.
We specialize in all areas of retirement, including Social Security planning, tax and income planning, retirement rollovers such as 401ks, IRAs, and pension buyouts. Our goal is to provide peace of mind before and into retirement. Goals. Welcome to Maximizing Your Social Security, the foundation for a successful retirement income plan. When the older generations retired in the past, they just went down to the Social Security office at age 62 or 65 and filed for Social Security. Now it's a little bit more complex. There's a lot more information out there. There's more information within the baby boomer generation, trying to provide as much income as possible. People are living longer. Life expectancy years ago was a lot less. So now people want to get the most out of their Social Security as possible. So today we're going to be talking about some of the highlights on how to maximize your Social Security. Well, notice to the attendees, we are not affiliated or endorsed by the Social Security Administration or any other government agency. A little bit about asset preservation. We have been assisting our valuable clients' needs since February of 1997. Asset preservation advisors pride themselves on guiding clients through retirement plan, development, education, implementation. Our time-tested strategies have provided our clients with consistent growth, safety, peace of mind, and lasting success. We are an A+ rated company on the Better Business Bureau, and we manage over $350 million in safely managed accounts. Social Security basics. This might be a refresher for some of you, but we're going to talk about a few things regarding Social Security and the changes that have happened over the course of time. Finding your benefit information. You can find your benefit information on ssa.gov/myaccount. You will be asked to create an account, and with that, you can research your earnings. You want to look at your earnings in the past and obviously your current earnings and make sure they're correct. We have, and sometimes, found that some of the earnings are incorrect, so people do make mistakes. You want to view your benefits. You want to view your benefits at age 62, 66, which would be full retirement, or 67, and age 70. You want to look at some of the sample statements. It's a very educational website where you can gain a lot of knowledge from and decide on what ideas and options you have. Types of benefits out there. The most common benefit is SSI, retirement income and spousal benefits. We also have divorced and spousal benefits. Some of the spouses who don't have the work history as the main breadwinner may have access to 50% of their first spouse's benefits. With divorced, if you were married over 10 years, you may have access to 50% of your ex-spouse's benefits if you qualify. Survivor benefits. Everyone, unfortunately, who loses a loved one is entitled to benefits at age 60 years old. So giving you some providence for your future as well. Disability benefits, which is a large one. They will also provide some benefits for people who are disabled and cannot provide for their future. The most common question we get at our office is, when can you file for benefits? The minimum age is age 62. The maximum age is age 70. In order to receive 100% of your benefit, you must file between age 66 and 67, which is considered your full retirement age, or FRA as we refer to. On the chart showing here, if you were born 1937 or earlier, your full retirement age is age 65. Each year after that, it increased by 2 months. So, for example, 1938, it became 65 and 2 months. 1939, 65 and 4 months. All the way up to the years of 1943 through 1954, where your full retirement age is 66. Then they decided again, each year after that, they're going to increase it by 2 months as well. 1955, your full retirement age is now 66 and 2 months. all the way up to 1960 or later, where your full retirement age is 67. Now, people ask, why is the government or Social Security doing this? A big answer to that, or a qualified answer to that, is because people are living longer. And the Social Security fund is being depleted over time. So it is more important to decide on when you take those Social Security benefits. What to consider when planning? You want to know your complete wage history. You want to know how much you earned back in the 90s. And when you do get your Social Security statement, if it is mailed to you or whether you get it online, you can look at your wage history on page 3. When you had that paper out back in the 1970s, all the way up to your current job where you're probably making a lot more income. You want to know your desired retirement age. Even if you don't know that exact date, you want to have an idea, maybe a time frame, maybe 62 to 66, whatever it may be. And then your estimated life expectancy, or what we refer to as your shelf life. How long are you going to live? That plays a big part. Obviously, people are living much longer nowadays, so that's why they may be waiting to get that higher benefit in Social Security. Inflation and COLA. Now, we know the government tells us that there's no inflation, right? We know that's not true. There's large inflation out there, so we want to keep that COLA adjustments as we move forward to get more income out of Social Security as we can. And then, most importantly, other sources of income. You have qualified accounts. You have non-qualified accounts. Remember, pensions are a thing in the past. A lot of people aren't receiving pensions anymore. So these accounts are going to be important accounts to supplement your Social Security down the road. And how you supplement them most tax efficiently is more important as well. Current for 2020, there has been some changes. Your maximum taxable wages for 2019 were $132,900. That has been increased to 2020 at $137,700. If you are working for an employer, 6.2% of your earnings go to Social Security. Your employer matches that 6.2%. And obviously, if you're self-employed or a 1099, you put in the full 12.4% into Social Security. Maximum benefit amount at FRA or full retirement for 2019 is $2,861. That has increased over time as wages have gone up, and it is now $3,011 for 2020. But remember, this is full retirement benefits, not benefits at age 70. The average benefit amounts for any individual worker collecting Social Security today is $1,479. For married couples, it's $2,491. The reasons why those numbers are so low or seem so low is because most of the population, or a good 2/3 or more, collect Social Security before their full retirement age. How are your benefits calculated? They use a formula. We're not going to get into too much depth with the formula. We want to know your top 35 years of work history. You want to know that. You want to see of those years, because some of these years that you're currently working may be replacing some of the years in the past where you were making less income. So that will increase your benefit over time. They take your top 35 years and they adjust them for inflation to come up with your average indexed monthly earnings, or what we refer to as your AIM. And with that formula, they come up with your primary insurance amount or your full retirement benefit. How much income will you receive? Now, this chart kind of gives you an idea of some hypothetical numbers based on some income that you earn throughout your livelihood. $50,000 to $100,000. As you noticed here, if you have an average annual income of $50,000 over your working career, you can expect at age 62 to collect about $1,389. At full retirement, it would be $1,853. And then you can see at age 70, it goes significantly higher at $2,446. If we move over to the other side of $100,000 average income, you look at the numbers at age 62, it's $2,015 over collecting at age 62. At age 66 or full retirement, it's $2,687. And at age 70, it's $3,547. So you can see the significance over time. I think everyone knows this question. The longer you wait, the more benefits you get. So at full retirement, based on someone collecting $2,000 a month, their obviously yearly income from Social Security will be $24,000 a year. If they decide to take it at age 62, they receive an actuarial reduction of 25%, which would equal $1,500 a month, significantly lower. And then at age 70, if they are able to wait, they would receive 8% increased credits per year, which would take their Social Security benefit up to $31,680. How does COLA affect your benefits? COLA stands for your cost of living adjustments. And as you can see on this chart here, we represent COLA from 1978 all the way to 2020. And in years in the past, obviously in the 70s and 80s, when interest rates were a lot higher, you obviously had higher COLA adjustments. So your Social Security would increase by that rate. In fact, back in 1980, we actually had a COLA adjustment of 14.3%. Unheard of, right? Between the years of 1975 and 2020 now, as interest rates have plummeted along with the COLA adjustments, the average COLA adjustment over that time frame is 3.68%. If we look at the last 24 years, the average COLA adjustment is 2.10%. It is my opinion that the government wants to keep that COLA adjustment at around 2%. And we want to look at COLA in a positive light. In this example next, you will see that. So if you started collecting your Social Security benefit back in 1990 of $2,000 a month, your benefit today with COLA adjustments would be $3,850 a month. So we want to look at COLA in a positive light. Obviously, that's given us more income power over time to keep up with inflation. Very important question that we receive, and probably one of the most important over time, is can I work and collect my benefits? So, can I collect Social Security and still work? Will I be penalized? There are definitely some buts to that question. So we want to look at between the age of 62 and 65, and these numbers are updated on an annual basis as well, you are able to make up to $18,240. And that's W-2 1099 income. If you make $2 above the $18,240, Social Security will penalize you $1 on your next year's collection of Social Security benefits. So again, something you want to be aware of. Now, at full retirement age, that number does go up and there is a monthly offset. Full retirement age benefit is $48,600. But what they do is they take your January 1st to your birthday. If you've made over that within that time frame and you have a late birthday, obviously you're going to pay a penalty on $1 for every $3 above that income. So again, something you want to be aware of if you're going to collect Social Security before full retirement moving forward. Let's take a look at an example. If you're age 65 and you make a $60,000 income, you're obviously your exempt amount is $18,240. So they're going to subtract that from the $60,000 to come up with your penalty basis of $41,760. And remember, it's a $1 penalty for every $2, so we just divide that number by 2, and we come up with a Social Security penalty of $20,880. So again, if you are collecting the next year and you're expecting $2,000 a month benefit, Social Security will take those first 10 payments. You won't receive a payment till the 11th month. So it's something you want to be aware of and concerned about moving forward on how to take your Social Security. To receive one of these customized complimentary Social Security reports, we'd love you to please contact us at the number listed or at the email as well. We'd love to get a chance to give you our own approach and when is the best time for you to maximize your Social Security.